Hey, have you heard the news? They're saying that Denver is now a buyer's market. Yeah, that's right. That means that the buyers will have the upper hand when it comes to buying a home. But will they really? Housing prices are still up. Interest rates are still up. And in the next few weeks, we have things like the jobs and economic reports, the presidential election, and the Fed is meeting. In today's video, we're going to look at some of this crucial information on the Denver metro housing market, the Fed rate, the mortgage interest rates, and why maybe there's a sweet spot for buyers and sellers coming up this fall. Let's start with something everyone's been keeping their eye on. I know I have, and that's mortgage rates. Now, I don't know about you, but last month when the Fed dropped the Fed rate by 0.5%, I was doing the happy dance for my buyers, thinking, yay, this is going to be great for them. Now, I know the Fed rate and the mortgage rates don't always go hand in hand. Like when the Fed drops the Fed rate, it doesn't automatically mean that mortgage rates are going to go down, but they do tend to travel in tandem, initially rising and then slowly coming down. In this case, rates have gone up, and instead of coming back down like they normally would, they continue to trend upwards. And we have to remember that the current rate, which is hovering around the mid sixes for a 30-year fixed mortgage as I film this, is actually a full percent down from what it was this time last year. But we have a lot of stuff coming up in the next few weeks that could cause volatility in the market and possibly affect mortgage rates. One, of course, is the election. Then we also have economic and jobs data. And right after the election, we have the Fed meeting. And although there is talk of a potential quarter-point Fed rate cut, realistically, depending upon the jobs and economic data, to be honest with you, I think it's a crapshoot as to what the Fed will do, which means rates could move in either direction. If you're on the fence about locking your rate, I always suggest chatting with your mortgage professional for some tailored advice. If you're in my area and want to talk to a mortgage professional, please reach out to me. Happy to refer you to one of our trusted lenders. Right now, Denver metro area housing market is still moving, but the dynamics have shifted dramatically. The median price for a single-family home is slightly over $571,000, which is down 1.5% from this time last year. Some of this might be as we shift into a new season. We're entering the fall and winter months where historically you see prices trend downward slightly. Also, this may be because mortgage rates continue to trend slightly upwards, putting a bit of downward pressure on the housing price. Also, the available inventory of homes for sale is up 11.2% this month and sits at 10,187 active listings, which is a 51% increase over what was available just last year. And that in turn has led to an increase in median days in the market. That's before going under contract, which is now up to 26 days, which is 11 days higher than this time last year. However, we must remember that this number fluctuates depending upon the type of property, the location of the property, and of course the price of the property. To be honest, I've seen homes on the market fewer days, and I've seen some sit on the market a lot longer than that. Pendings or under contracts are up 29.1%, but some of that is from September when the Fed first cut the rate. Rates were in the low sixes and buyers were extremely active. Also seeing where properties are coming back on the market. The previous contract failed for some reason. So our sold or closed listings are down slightly by 0.4%. All this then is reflected in the weeks of inventory of homes for sale we have available. That currently sits at 14.4 weeks, or slightly under 3.5 months, much higher than what we saw this time last year when it was only 9.4 weeks of inventory. This is the most inventory we've seen on the market one time since 2012. If you've seen my previous videos, you know I talked about the type of market we're in terms of how much inventory is available for sale. We have under 5 months supply of homes for sale. It's usually considered a seller's market. Inventory, high demand. A balanced market considered anything between 5 to 7 months supply, where it's not really a seller's market, it's not really a buyer's market. Buyer's market is considered anything over a 7-month supply of homes for sale. That's when you have lots of inventory for sale and very little buyer demand, much like what we saw back in 2008 through 2011. However, I think we have to look at this inventory a little bit differently now, because along with this increased inventory in the market, we also have higher home prices and higher interest rates. And we're heading into the fall and winter months where it's typically slower because, realistically, who's on the market at this time of year? Yeah, only sellers who really need to sell, along with serious buyers. So now this 3.5 months is trending more towards a balanced market for the buyer. This means the buyer has choices, doesn't have to act very quickly, and the buyer can have conversations with the seller regarding some concessions, whether that be a rate buy down, help with closing costs, or even an adjustment in the sale price. This is the time of year, considering the unknowns facing us in November and December, kind of make this a window of opportunity for buyers that really want to make a move. Now, I know what some of you are thinking, but Peggy, I want to wait till rates go back to 3% before I make any moves. Trust me, I've heard this a lot lately. But here's the truth. Waiting for those 3% rates, which, by the way, may never materialize, leave you sitting on the sidelines for a long, long time. Because remember, those were government manipulated to stimulate the economy. We were in COVID. We've seen some big changes in rates over the past few years. Hard to predict what will happen next, and our economy is going strong. Something else that's interesting, in a recent report, 26% of first-time homebuyers reported that they're waiting until after the election to buy, hoping for that potential $25,000 grant that's been mentioned by VP Harris. If that happens, see a huge jump in home prices, especially here in the Denver metro area. Because do you remember back in 2009, there was an $8,000 tax credit during the worst times in the housing market? And here in the Denver metro area, the average price on a single family home soared to over 10%, in simpler terms, over $25,000, thanks to that $8,000 tax credit. Now just imagine what might happen to home prices with a $25,000 grant. If we still held to that 10% increase with today's home values, that's an over $80,000 increase in home prices, which is crazy. Can you imagine? So if you're thinking about making a move, you might want to act sooner rather than later. And for those of you that have watched some of my videos, you know I'm a big proponent of buying properties in the fall and winter months. And here in Denver, with the higher home prices already and the big unknown in the interest rates, there really is a short window of opportunity. And it really pretty much starts right after Halloween into about the second week in January. During that time, you have a great chance of negotiating the best deal for yourself with sellers looking to make a move. What do you guys think about this timing strategy? I've bought all my property during this time. Put your comment down below. You know, prior to the Fed rate cut a few weeks ago, buyer activity was on the rise with the anticipation that the Fed would cut the rate. And those who could afford to purchase took advantage of the sudden rate drop several weeks ago. And those who didn't now seem to be sitting, waiting to see what the election will bring. I know there's a lot of buyers out there that want to buy, and I know they're concerned about the election and what impact an administration change might have on the economy. And so we've seen a bit of slowing in the market. Right now, everyone seems to be in wait mode because on October 31st, the new jobs report will be released. Now, if the unemployment rate rises, then mortgage rates will be lower. But if unemployment rate drops like it did a few weeks ago, mortgage rates will move higher. November 5th, we have the presidential election, and this may impact mortgage rates based upon the policies of each party and their plans to stabilize the economy and the housing market. Though, to be honest, I don't know how quickly that will affect interest rates. November 7th, that's the next Fed meeting, and nobody has a clue what the Fed is going to do post-election. Will they keep rates unchanged or drop the Fed rate by 1/4 to 0.5%? Should we make a bet? What do you think they'll do? All in all, the Denver housing market is an interesting place right now. With rates moving and the market stabilizing, now could be a great opportunity, whether you're buying or selling. Sellers, you could take advantage of serious buyers right now for a potential rate increase, and buyers with sellers looking to move their properties, this might be the sweet spot when it comes to negotiating a good deal for yourself. Hi, my name is Peggy Durstoff, a realtor at Live Denver Suburbs, powered by HomeSmart. Thanks so much for tuning in. If you enjoyed this video, go ahead and check out this fun one that I did last week, where I talk about new home builders and if they're keeping up with some of the design trends. And I take you on a tour. In the meantime, we've got big things ahead with the election and the Fed meeting, so stay tuned. I'll see you in the next video.